it's what you think is what's going to manifest itself. I think it's anything in life. I mean, it could be, with relationships. It could be a particular business you're starting up. If you're a professional athlete, in other words, our thoughts define who we are. So, and you can channel that into being adept at your profession as well. Particularly in this business, but it could be with any business that people way underestimate how long it takes, So I can think of new things I was learning every decade, and it's always, the markets evolve and change. So you never stop, there's never one moment in time where you're aha, I'm just such a master of everything, if that ever arrives, the market will be say you think you're better than you are, huh? Right?
I really, really wanted to do it, right? It was something that, I've always had interest in, all those sorts of things. And, I really, really did not want to give up, throw in the towel, right? So, I guess I just kept going until I got it. If anybody's coming in thinking that trading is going to be, you're going to be an expert trader next week, then it's just not going to happen, right? No. It's usually, the guys that I teach, right, it takes them 12 months to get there.
How do you spot a good trader? How do you find them?
Well, you don't. You can't.
Okay.
Right? There's a lot of guys that have come through this and they've come and gone, right? The guys who are good, how do you get a good soccer player or footy player? Right? They have to go through the under 12s, under 13s, under 14s, to the seconds, and then, they get selected all the way along. I don't know who's a good trader before they walk in the door. I just don't know. It's the guys that, do have the dedication for it, end up getting there, right? It's not rocket science, right? There is a lot of components to it, but it's not rocket science, right? You do have to learn a lot, but it's not something that's outside the possibility that that anybody can really learn.
Oh, it's all just an endurance game. I mean, it's perseverance. You want to be a trader, it's like saying, oh, you want to be a professional pianist? Okay, well, you better love it, because you're going to be practicing 8 hours a day for the next 8 years. And then you'll be a professional pianist, or probably longer than that, professional golfer, professional tennis player. How long do you think it takes? What if you want to be a top neurosurgeon? How much stuff do you have to study in terms of medicine? And then how many trials or patients or internships do you have to see, right? It's the same thing, over and over. How many chart examples do you have to see? How many? Because, there's no such thing as one chart pattern. The market never repeats itself exactly. It's different every single time. You think you can get an idea off past data, but every single period, you see these people that have been in the markets for 50 years, like, I've seen this before, that type of thing. So, it's a lot of screen time and perseverance and patience. You just have to have patience and greatly drop your expectations down. And then I think you'll have a better chance of not getting too frustrated or down on yourself or angry on yourself. It's very easy for people to beat up on themselves in this business, and then do the negative self-talk. And so I always found it helpful throughout my career, reading motivational books, getting motivational sites, positive thinking, magic crystals, whatever it takes. You have to be your own cheerleader in this business, because nobody else is going to do that for you. You have to be a very self-actualized type of person and take full responsibility and full accountability. And okay, if you lost money that day, maybe you didn't do your homework. And you're going to have to also become a very, very independent thinker, where you are your own trader. You're not going to, you can, look at blogs or Twitter or chat rooms or something like that. But you have to come up with something that's your own thing, where it's not dependent on somebody else's opinion, and it has to be strong enough that somebody might be bullish or bearish, on a particular market that you respect, but you might have, you might say, no, this is what I see and this is what I feel, and maybe they're not going to be right this time, but I'm following my program, and so you have to develop your program. And I think that takes people an extraordinarily long time, to reach that point where they have developed their own trading program.
If you remove emotions from every decision, it becomes really, really easy and logical. It goes with like Forex, with like anything you do in life. It's all like that, because every decision that we make, there are hard decisions because most of the times you have emotions involved in it, right? So once they're gone, it's just logical, A or B.
But there are some people who I'm surprised have become successful. But now that I learn more about them, I recognize it was my own failure to see their just tremendous ability. It wasn't traditional ability. It's not something, I think a lot of times we judge people by the way they speak and the way they act and the way they look, perhaps too much because we're sort of trained to do that. And there are people, traders come in different shapes and sizes and talk differently, and there's sometimes people are so immensely talented and they're just not traditionally trained in lots of different ways, and you have to be really open-minded to understanding that, and to not think that you have all the right answers, so that people have to act a certain way.
I've got a guy that trades for me at the moment, and I just had a conversation with him this morning. He said, because I've been turning blue, basically telling him that, just stick with what I'm telling you, right? Or to stick with the plan that, that we've developed. Because, if you keep changing or you keep doing this or that, then it won't work. So what has he done? He's gone out and changed it and done his own thing, right? But he's had to go to that space, right? To be bitten, to lose some money, to get the pain that's associated with it, to understand, to come back and do it properly.
The only reason people fail with the plan is because they involve emotions in a loss. So now, when price, makes a high, comes back to retest and retest the high, that happens 70% of the time. 70 to 80% of the time. So there's always a losing probability. Now, what happens when you take a loss, right? Do you take that loss as a losing probability, or do you take that loss personally? That's the difference, right? So when I used to have those losses, I would take those losses personally. I would be like, oh man, you know what? No, I'm going to show the market, but the market shows me. So those were the harsh realities that I had to accept. That okay, there will be a losing probability, but if I focus on the same process over and over again, on the long run, it's a winning percentage. So I had to really come to grasp with that concept that this is a process, and if I continue to make logical decisions based on the highs or the lows, in the long term, I'm going to have a profitable outcome.
And part of the experience is the learning curve is just understanding that the game is always changing, and by that I also mean the relationships and the correlations, because over time you do develop biases, from correlation. So for example, I would say in the 80s and the 90s, there was about a 95% positive correlation between bonds and the stock market. If they were lowering their rates, it was positive for the market went up, and you kind of went all through the 80s and the 90s of these, going from 14%, rates down to 6% rates. And so, you can see in the afternoon, just like you compared the indices, the NASDAQ against the S&P is looking for confirmation, non-confirmation, right? The way that we use different markets for confirmation. And, okay, the bonds made a lower high, but the S&Ps made a higher high. That's a non-confirmation, so it was a sell. And so all that inverted when you went around the 2000, and sort of there became this deflationary mentality, right? And then all of a sudden the bonds and the S&Ps were almost nearly 100% inversely correlated, right? It's the risk off in a very macro way. So relationships do change, like one time, it used to be that the bonds and the yen were like highly correlated, and then there was 3 years where they were inversely correlated. So a trader has to get used to seeing reliable relationships change and shift, and that's also part of the process. How many traders have seen a real true bear market? Would you have called that big swoon that we had 2 years ago bear market? I don't know. So you have to see all different types of products, of markets, experiencing yourself under different conditions. How do you handle pressure? How do you handle drawdowns? How do you just go through every cycle out there?
We have to be logical here. If my account grew by 15%, it's only logical to grow your lot size or your volume by the same percentage, because that's going to keep you on track, because sometimes what happens is that when you lose an amount, you're more prone to increase your lot size to make that loss back, but it's the opposite, because when you make a big amount, the first thing you need to do is maybe withdraw half of that and then increase the lot size with that percentage that's left over. And that's how you efficiently start compounding your account.
First, trade what you like. You don't have to have the perfect system, all that stuff. Or say it the other way, you can have a perfect system and it won't work if you don't like the way it trades. Like a story that I've written about or whatever. I have a profit. My first robot I made, I stopped trading after 8 weeks, and I had made money. Like I was profitable. I just didn't like it. Don't look for the perfect system based on someone else's likes or dislikes or what they created. Trade what you like. If you don't like the losing, and this is your life lesson, but if you don't like the losing, you don't like it. And you'll never, ever be successful. You can have a mediocre system that you're happy when you're in a trade. You love the methodology behind it, and you don't care if it loses because, the market turned, it's okay. Rather than buying a quote unquote perfect system that like when you lose, like, well, why did that lose? Well, why was it stop out so fast? Or why am I in a trade for 3 months only to lose? If you're having those thoughts, you're for sure going to lose. Right? But if you have a system like it lost today, I understand why. Let's get ready. I'll watch it trade tomorrow. So the biggest tip is trade something you like, to where if it loses, you're okay. I mean I've left so many systems because as soon as I take a loss, like I don't like that anymore. Right? Now I'm much more comfortable with the losing part, and that makes just a world of difference.
It's pretty unlikely that you are going to develop any type of robust and durable edge in this market now. I mean, every system, if you will, is going to have much bigger drawdowns than people probably recognize. I mean, I could trade a volatility breakout system on a basket of 16 markets, and I know I'll make money every year, doing the system 100% mechanically, even though it's a lot of work, But I also know that it can have a 20% drawdown too. It can have a 4-month drawdown. I mean, that's just the nature of the system, even though it's making trades every day. Yes, there's an edge there, just like there's an edge to trend following, right? Okay, but trend following, you can still have losing years. You can still have big drawdowns. Trend following is a 10-year rolling window. That's the mindset that you have to have statistically. If you're going to be a trend follower, you have to say, I will be positive over any 10-year period, but you might be negative over a 3 or 4 year period, right? So yes, there's an edge, but is it realistic for your average trader? No, absolutely not. I don't know of any private individuals that make money trend following, even though like every, thesis would like to sell you on that, but it doesn't work that way in real life. So, where is your edge? Your edge is going to become from being prepared, to experience. I mean, experience is going to be your main edge, period, because everybody sees the same technicals, Nobody's stupid out there. It's a very efficient market. When that horse leaves the barn, boom, that horse is gone. And you're either, on board riding it or, participating in those money flows or not, So your edge is all preparation and experience. And there's very little that you can do to speed up that process.